Hello, Jim here. I've been selling options for a number of years and making some really good extra income. And I've had a lot of subscribers and members recently asking what kind of returns have I earned in those accounts, especially since I've been selling options. Today, I want to talk about that. I'll share with you some of the returns in one particular account. And I'm going to share with you some pretty interesting features at Schwab for actually looking at your return and comparing it to like the S&P 500 or the Russell 2000. So be sure to stay until the end where I go into detail on how to use that, as well as how to use the history within Schwab to kind of prepare yourself tax-wise or, to think about other considerations as you're trading. So let's go ahead and get started. And as always, thanks for joining me. Okay, now some of the key points that I want to hit on in this video, I've listed here in this Word document. I do want to give a brief history about my background in finance. I did get a bachelor's of science in finance, and I got a master's in what's called decision sciences, but I could have had a minor in economics. I actually had a lot of classes with Dr. Radicek at Georgia State, and I have always loved both finance and economics. It's stuff that kind of came natural to me. And then over the years, I did hire a financial advisor when I was working too much and I didn't have the time to actually manage my own finances. And about 6 years ago, I decided I wanted to take a look to see could I do better than my financial advisor at that time. I had a standard setup. I believe I was paying them like 1% on a yearly basis. And I did some comparisons and I found I could do better myself. So at that point, and I'm not sure it's exactly 6 years, it may be as much as 8 years now, but I took it over myself. And since then, I've been able to do a lot better myself. And for many, many years, all I did was sell covered calls and make investments. Now, I've always liked buying, ETFs or stocks that I like, and, even buying the S&P 500 or, the Russell 2000 and buying ETFs. I started with options just with covered calls many years ago, and it worked out pretty well. I just started with Coca-Cola. I found a book in Barnes & Noble and read about it and tried it. Actually, I talked to the trading desk at Schwab and they walked me through it, and it worked out. And I've been, like I said, trading covered calls 12, 13, maybe 14 years. And then about 4 years ago, I had a bunch of positions get assigned away from me. So I ended up selling more Coca-Cola than I wanted to at that time. And then that's when I decided to kind of look at the whole thing again and how could I trade options the right way. And that's how I got into this whole scenario. So then at that point, I started trading more aggressively, and I started out in my taxable accounts, which was a mistake looking back. I believe this was 3 years ago, 21. And I did well, but I had a big tax burden that year. I think I made an extra $65,000 in my two taxable accounts. So then I switched to doing more in my retirement, and I decided to move most of my puts over to my retirement accounts and primarily do covered calls and a few puts here and there in my regular taxable brokerage. And I did that for a fair amount of time. And just 6 months ago, I decided I wanted to compare, just like I did looking at how I was doing compared to a financial advisor. I decided I wanted to compare my returns with my 401k. I had an old 401k with AT&T, so I compared that, and I found again with selling options I could do better than what I was doing in my 401k. At that time, I had the 401k moved. Well, it wasn't moved. It was already at Fidelity, but I just had it transferred to an IRA. Then I started trading puts in that. And then recently, about 5 months ago, or the beginning of the year, I moved my IRA from Schwab over to Fidelity, including my SEP account and my Roth account. So I've moved my accounts quite a bit, which has made it kind of hard to determine exactly how my return is. But that's kind of a history. That's, going back. So in this video, what I want to talk about is I'm a firm believer, and I've done some research with it, that you definitely can do better with selling options. Part of the reason why is if you're selling puts versus just buying stocks, just the nature of selling puts, and it could be cash secured puts, could be vertical put credit spreads, could even be the put side of an iron condor. You're picking a price that's lower than the current price. So if you had just purchased the stock at that time, you would end up paying more than selling a put and potentially picking it up at a lower price. So just the nature of puts in general will allow you to pick stock up at a lower price. It also encourages you to buy and sell stocks in increments. One of the first steps I took when I set my accounts up to sell options or to trade options was to kind of set everything up in 100 increments, especially if you're selling options, you're selling what's called covered calls. Again, someone will pay you money for the opportunity to buy your stock. You need to do it in increments of 100. Every contract is 100 shares. And that's both for calls and puts. Now, put is if you sell a put, someone will pay you for the opportunity to sell you the shares, and you can again make premium. And so that's what I started doing, and having everything in those kind of $100 or not $100, but 100 stocks or 100 ETF, ended up working out really well for me. Even with managing the account, I ended up getting rid of some poor performers. They performed okay, but I had small increments like 15 or 20 shares here, 15 or 20 shares there. I ended up selling some of those. And again, all I did was sort the account by who performed the worst over the long term. And I just got rid of those and kept the ones that performed really well. Some of my ETFs have performed quite well, so I kept those. And then I believe it's kind of a steady, slow process to learn options. I get a lot of questions. Well, how much money do you have in your account or capital to earn those kind of returns? Which I always find that an interesting question because I've been trading a long time. Again, well before options, I've been a fundamental investor. I've always liked, companies that pay dividends and I can earn a good income. So I've been investing a long time. And then now I've been investing with options quite a while. So just because I can earn a certain percentage on a monthly basis doesn't mean that someone else can. Some people may be more advanced than me. They may be extreme advanced options trader and can potentially do better. I like to tell people I can do between 1% and 3% on a monthly basis, averaging somewhere in the middle of that, about 1.5%. But I like things very steady, and I didn't start with that. That's what I've kind of ended up. At first, I just started real low. I tried to earn $1,000 a month. I tried to, just be successful with my trades. And then as I learned more and more, and I tried different option strategies, it worked better and better. And I increased. Usually quarterly, I would look at how did I do last quarter. Then I would up how much premium I wanted to make in a particular month, and then also how many dividends or how much dividends I wanted to earn. And now that interest is higher, I'm also looking at that. How can I earn more interest? And I steadily increased it. I didn't say, well, I should be able to do what this person does at 5% a month, so I want to also earn that amount. Or if someone tells you you can just follow what they're doing and potentially do the same thing, I would be very questionable of that. It's a learning process. It takes time, and you may find you prefer to do it differently. I pick, between 40 and 60 day expiration. Some people only want to do weeklies or do 30-day expirations. You may find a better way of doing it, and that's what I encourage with my members. Look at my trade, diagnose it. How might it work better for you? Do you even want to make the trade? Does it fit with your portfolio? To do your own analysis, and maybe you can do a better trade. I do firmly believe picking the right stocks is the key to any kind of options trading or investing in general. It kind of makes or breaks you. You pick the wrong stock and it, halves in value. There's not much you can do. It doesn't matter if you're selling calls and puts. That stock is a dog. And the best thing you could do is get out of it. So just wanted to share those things. Also wanted to share, if you're curious about my memberships, take a look in the description. I have 3 levels. I have more and more people joining. I have advanced people. I have beginners, the advanced people help the beginners. I get lots of comments. I have people sharing their trades. I I like to have very little barriers to entry. So if you want to try my membership, I have what's called the Investor Club. You could try it for a week. You get access to me fairly easily. There's no jumping through hoops to try it. And I have people that leave and then come back. I have people that start at one membership, switch to a different one, and so on and so on. So what's important to me is to have an area where people can trade, they can feel safe. I also make sure that the community is safe, the rules are followed. You know, again, people's safety is my number one concern. So I just wanted to share that. If you want to learn more, again, look in the description, or you can reach out directly to me. And then, as always, please hit that like button, subscribe, and let's jump into the next part of the video where I'll show you this kind of neat features and functionality of Schwab, and partially why I like Schwab better functionality wise. I like the interest better at Fidelity, but I definitely, some of the features and functionality of Schwab is really good. Now, I've left my original accounts open that I had at Schwab, so if Schwab can ever get to a true sweep account like what I have at Fidelity, I may move my funds back over to Schwab. I found moving the funds from Fidelity or from Schwab to Fidelity was relatively simple. And my guess is it would be relatively simple to go the other way. They both have great support. You can always get someone on the phone, and they will kind of take it for you or from you and run with it. So with that being said, let's jump into the next part of the video. Okay, now I've opened up Schwab. This is my IRA with options. This is the account I've moved over to Fidelity. So there's really no funds in this account. But at the top, you can see you've got summary, position, or balances, positions, investment income. Now, investment income is also really nice. It'll show you what your dividends are on a monthly basis and compare it from last year and then next year. But we won't go into detail with that. But they do a really nice job, and they do it graphically, which makes it nice. Next is portfolio performance. So this is what we're looking at. So this is the account. And the blue line you can see is actually me. So it's saying between January 1st, 2023 and December 31st, 23, I had a pretty good return. I was a bit lower than, like if we go over here, I think it was almost 19%. I didn't do as well as the S&P 500. I did better than both the Dow Jones and the Russell. And you can actually see the numbers over here. So you can see the investment change was 17,000, and then income, investment, gain and loss. So I did fairly well with it. Now what's interesting that I found is you can do better almost on down markets. So this 23 was kind of flat to up market. Actually, it was probably more of an up market. I would show you 24, but I had moved my account at 24, which makes it difficult to do a comparison. But you can see here, I didn't do quite as well as the S&P 500, which is really hard to do. Even if you have an advisor and all they do is have you in the S&P 500, it would be hard to beat that. So the fact that the S&P 500 just for 23 was up, what is that, 25%, which is unusual. Typically, it's not up that high. Now, one thing we can do is we can come over here and let's compare it to 2022, because 2022 was when I actually started trading in this account. And you'll see here, again, the blue is me, and I actually outperformed both the S&P 500, the Dow Jones, and the Russell 2000 by a fair amount. 15.87% to, if you compare it to the S&P 500, 3%. And part of that, again, is because 22 was kind of a rough year. I believe it was down overall. Here you can see with contributions, a lot of it has to do with income. I did bring in a fair amount of income. I don't think I had many dogs in 22. I believe the dogs were in 23. When I talk about a dog, two of the ones, just stocks that didn't perform well. Lumen was one, and then I think Big Lots. I think if you look at those two in 23, I probably would have beaten the S&P 500 in 23. But this page gives you a lot of detail. Now, if I looked at this account, my brokerage one account, and I look at the same time period, I also beat it with this account. And this account, you can see I took nearly 69,000 out of it. I had a bunch of net contributions, but it does a nice job breaking it all down. It makes it easy to compare. Again, I'm the blue at the top. Now in 24, I think I'm not sure exactly where I am. Again, with moving these accounts over to Fidelity, and Fidelity, I have not found this, but I haven't found anything quite like this. It doesn't mean it doesn't exist. It probably just means I haven't found it yet, but it very well might exist. But Schwab does a nice job, and you can actually see how your returns are. And you can do this by each account, and it makes it nice. So now another thing I wanted to share, which was this history. And now you can also, like, let's go to this IRA with options. And this is just a history of different, so you can see your dividends. But the part I wanted to show is this realized gain and loss. And then if we scroll down, you can actually, it shows you how you're doing in that particular year. So in 23, you can see my actual gains. I had total gains of 24, total losses of 17, and net gain of 7. Now, if I went back to 21, that's where I had significant, well, this is actually my IRA, so I don't worry as much about the gains in here, and that's partially why I moved a lot of my puts over here. But this pretty much jibes with, if you're a TurboTax person and you're downloading your investment information, it jibes with this. I've actually compared it. Plus, you can actually see who are your biggest losses. You can sort by different columns. Like this is a Southern company. This was probably a leap, call block. Sometimes if you do a leap, you might close the leap in the current year for a big loss and then have a gain farther out. So you can almost move your gains from this year to future years. So if you find, oh, wow, I have some major gains this year, say you were in one of your taxable accounts, you can move some of those profits from this year to a future year. So it does a nice job. And so like this is sorted. I can see who my biggest issues were. Schwab dove at one time. It's recovered since then. Square. So Block. I don't know why I guess they changed their name to Block because of crypto, but I still refer to them as Square. Procter & Gamble went through a tough time at one point. And then some of the others, again, were leaps. I probably had rolled them out. But a lot of information here you can deal with. And that's kind of what I wanted to show you. And then you can see this for every account. You can look at your taxable, and it will, like I said before, it'll tie in with your taxes if you're using something like TurboTax or one of the other software products that are out there. And this is what I use to kind of look at my returns. I'm planning to share more of this information, but again, some of the key criteria, without a doubt, I did much worse before I started selling options. And the biggest impact on me, again, is picking the companies. You got to pick the right companies. And I'm talking from experience. I didn't look at debt. I got hammered with Lumen. I think Lumen went from like $14 to $1 or $2. I also got hammered with Big Lots. They also had a lot of debt, and I didn't go to the stores. I should have gone to the stores to look at what was going on. And there's others. I've had a couple of companies that have gone down a lot this year, but I do think they're going to bounce back. I don't foresee them being like another Big Lots or Lumen, but it could happen. There's no guarantees, and every company will go through downturns. Every company at times will make bad decisions, or they'll make a bad purchase of another company. A lot of times, a purchase of another company or buying a company and then entwining the two networks can have a negative impact for a short period of time. At least that's what I've seen with some of the companies I've invested in. So as always, I wanted to share this with you guys. If you have any questions, comments, please leave them. I do typically try to answer all my comments within 48 hours. And as always, thank you for joining me.